G'day, welcome to the closing bell on the 30th of July. Got a bit of a rally going in the market. I was telling you about the potential for a bit of upside last week. Threw out 3 stocks for you. We'll have a look at one of those. It's up about 20% over the last week, which is pretty good going. We've had the Fed raise rates 75 bips. The market's rallied after the Fed presser, where Chairman Powell said that future rate rises are going to be more data dependent. They're not going to keep raising at massive 75 basis point rate hikes each time. And things are slowing down. So we're sort of entering a new phase where the data that comes out is going to be very important. If unemployment starts kicking up, if inflation figures start really rolling over, growth really slows rapidly, the market is going to expect that the Fed won't raise rates too much further. And that's seen quite a few changes. The US dollar coming off, gold taking off, helping a few of the other commodities that have also been hit. So this could be a short-term thing, but it is probably a tradable bounce. And this is what I've been sort of talking about this last few weeks. It's been a very difficult market. I've called it no man's land, but we're creeping out of no man's land into an area where it could rally for a bit. Who knows? It could be the start of a huge rally. I mean, no one knows, right? But I'm just wary of the resistance above the market, and that's what I'll show you here today. So just quickly, let's have a look at the stock I talked about last week. This is Bigtincan Holdings. I told you about that when it was around 62 cents just last week, talking about the major waves. We were looking at that. I was showing you the buy zone of that major wave down there, the fact that we'd seen reversal out of that area and buying pressure was starting to come in, and saying, look, this is looking pretty good and pretty ripe for more upside. They came out with a pretty good quarterly. Looking at this, I'd say this is probably the beginning of a leg higher for this stock. But that's jumped from 62 cents to 75 cents in a week since I sent that out to you last week. So hopefully a few of you managed to jump on that one. And just looking at the market where it's at very quickly on the US 10-year bond yield, as we're saying, rates rallying a bit in the long end because they're thinking maybe the Fed's not going to raise rates hugely from here. So those long ends coming down a bit, which would be taking a bit of pressure off the market, a bit of pressure off those beaten up tech stocks. You can see here, this was that major level I was talking about for quite a while, around sort of 3.2%. That was the highest rate. And this is actually the bond yield chart. So making sure that you understand that. This is saying the yield going up, yield going down, and that actually means the opposite for price. So when the price is the yield's going up, the price is going down, and now the yield is going down on this monthly chart. So the price of those bonds is actually going up. So just want to make sure you're not confused by that. So the major thing to point out is we've had a little false break of that, decade high in the rates, and we're shaping up for a monthly sell pivot in the yield, which would be a monthly buy pivot in the bonds. So that's pretty big. We could expect to see probably more of a drift down over coming months in those yields. I'm not saying it's not then going to turn back up if we get bad news or whatever, but it just feels like that initial massive wave higher that has gone on for the last year and a half or two is probably over for now. And that could lend weight to the feeling that, stocks could be in for a bit of a rally. And so just moving on to stocks right now. Here is the S&P 500, and this is the monthly chart of the S&P 500. The 2020 crash, you can see there, the big rally. Now, the major thing I want to point out is that the long-term trend has shifted only just, and prices are now sort of racing up towards those moving averages. This is the time which can be pretty dangerous, because if the long-term trend is shifting down, it will be this retest of that area that is often the beginning of the real selling. So I just want to point that major point or a very important thing out initially. If we go back, I just want to show you something I have shown you in the past, but it's an important point. When that long-term trend shifts, when you've got the 10-period exponential on the monthly crossing that 20-month moving average, as you can see there and you can see there, that's the 2001, that's the 2007 crash. You often have the initial selling and then a retest of that area. And if it fails, that can be the beginning of a big move. And here as well, in 2007, you had a bit of a sell-off, and that's sort of like the period we're in now. And markets are rallying back to the moving averages, even though they've crossed to the downside. And that retest, could be the beginning of a big move to the upside for sure. But the point being, if it gets rejected from there, that's when it's like confirmation. And once that low of that structure fell through, that's when the crash really happened. So we're sort of in a similar situation right now. Where the long-term trend has actually turned down. And it's the first time for a while. But look, it could be a false signal, couldn't it? It could be something like happened in 2016, where it looked like it was turning down, and all of a sudden, monthly buy pivot, the trend changed, and then it's been an uptrend ever since. So, it's always an unknown, these things, but this is the first time it's turned down since 2015. So that's 7 years. What is going to happen on this rally, I guess? And I think there is a lot of resistance above. Doesn't mean it's not going to take a few months to play out and that sort of thing. And it could actually go a lot higher before ultimately turning down. There's a few key resistance levels I guess I'd point out would be around 4,500, which would be the sell zone of that monthly sell pivot. Up around there, sort of 4,400, 4,500, I'd expect there to be a lot of resistance up there. And it could take a while to get there, but I'm just wary that that's where it could all roll over from. So that's just really the major thing I wanted to point out today, I guess. If I just shift to a weekly, you can see the weekly chart looking much more constructive, isn't it? I mean, this is what we were talking about last week. You'll remember we had the weekly buy pivot, had a lot of work done. It's breaking above that 10-week moving average. And I said, look, we could be in for the move back to the longer term moving average. So we're seeing that now. It is taking shape, that we've got a bit of a run on. And look, it could really run. There's no doubt about it. But I'd expect there to be, lots of resistance up in that zone. So that's really how I'm seeing it from here. Gold is one that you keep an eye on. You can see that gold has bounced nicely from that spot where I said, look, it really doesn't want to go below there, below that 1685, was it? But I was saying, look, below that level, watch out. And it got right down there and has bounced quite nicely. So that could be it on this downside for the moment in gold, with rates starting to come back off, real rates lowering quite rapidly at the moment, and a lot of gold stocks really beaten up. So that's probably where the hunting ground is. Silver Lake Resources looks pretty interesting to me. There's a few others, but I'm not going to tell you because I'm probably going to buy them. So, that's really the state of play. It's a bit more interesting, probably an opportunity for short-term traders on the buy side to look for a few beaten up stocks, because the rally could have a bit of legs from here, I think. But the big picture is be wary over the next month or two. Take your profits pretty quickly on the way up, and start looking around the gold stocks, because I think there's a few bargains to be had there. All right, well, that's enough for this week. I'll come back with more next week.